signature event, and this is the first of its kind. We will be having other series just like this.
On behalf of the chairman of French-Nigerian Chamber of Commerce, Alhaji Usman Mohammed, and the entire board, I hereby declare the maiden edition of the CFO Luncheon open. Thank you.
It is the second event, physical event, that the Chamber of Commerce is successful to organize.
Good afternoon, ladies and gentlemen. Okay, we're about to start the event. I think we're done with the networking session. So I expect that all CFOs should take their positions right away. Thank you very much. So I received the Board of Directors authority to kickstart today's very, very important event. It is the CFO Luncheon in partnership with Mazars, Nigeria. It is beautiful to have CFOs of multinationals in the room this afternoon to, first of all, to relate with each other and, of course, to gain insights on key issues and happenings in the Nigerian economy, especially the regulatory environment and as it does affect your business. Let me announce to you that this is the first of its kind luncheon we are having at this level. And it's beautiful to have selected people, departments, and organizations. We call them the fund managers and those that hold the liquidity position of every organization. The COVID-19 has made us come together to have such an event. The stability of every organization, we know, while it is a strategic management imperative, it is the CFOs that would say we have the funds or we do not have the funds to ensure that our business stay afloat. So if we don't bring the people that have the funds in the room, then what do we have? So it is with that that I welcome every one of us to today's event, the maiden edition of the Fncci Mazars CFO Lunch. Let me say this, that this is a signature event and this is the first of its kind. We will be having other series just like this. So we targeted 50 CFOs, but no, we have more than 50 in the room already. So we're expecting about 60 CFOs here in the room today. And other editions will make it, bigger. One thing I understood was that as other CFOs were coming in, I discovered that it's like all CFOs, they belong to the same WhatsApp group, right? So because I saw that they were already networking with each other and they know each other from somewhere. And I think the admin of the WhatsApp group should be Mr. Ohabia, definitely. That is our guest this morning, and of course, he'll be speaking to us. Let me recognize the members of the board of the Franco-Nigerian Chamber of Commerce and Industry that approved this event to ensure that we are gathered here this morning. I want to recognize the vice chairman in absentia. He will be joining us very soon, Mr. Mark Genital. He is director over at Total. Mr. Lohon Kude is a board member of the Franco-Nigerian Chamber of Commerce and Industry. Thank you for coming, sir. He's also a board advisor. Thank you very much for joining us. He's the CEO of AXA Mansard Insurance and a board member of the Franco-Nigerian Chamber of Commerce and Industry. We have Mrs. Ize Matebese. Mrs. Ize Matebese is here. She is the managing partner over at Ize Matebese and Co. and also a board member of the Franco-Nigerian Chamber of Commerce and Industry. Of course, we're going to be having insights from Mr. Abdullahi Aliyu, who is the tax controller, Office of Non-Resident Persons over the Federal Inland Revenue Service. Mr. Abdullahi, please. I'm sure we all know Mr. Abdullahi already. And of course, we have here today the managing partner of our sponsoring brand for this event. They are not just sponsoring this session, it's a signature event. It's Fncci Mazars CFO Lunch. As a signature for this event. We have Mr. Ohabia GK, managing partner, Mazars Nigeria. And of course, someone else will be delivering a welcome the address on behalf of Mazars. So we have Mr. Peter Owofia, who is a partner regulatory service over at Mazars Nigeria. So it's not a long talk show. So I'll be leaving the podium very soon. So I will invite for the welcome address a board member of the Franco-Nigerian Chamber of Commerce and Industry who will be representing the chairman of the board of directors, Mr. Kunle Ahmed. Mr. Kunle Ahmed, please.
Mesdames et messieurs, bonjour. Mais comme nous sommes au Nigeria, je présenterai mon discours en anglais, s'il vous plaît. Members of the board of the Franco-Nigerian Chamber of Commerce and Industry, the managing partner, Mazars Nigeria, the tax controller, Federal Inland Revenue Service, the CFOs here present, and gentlemen of the press. I'm indeed delighted to welcome you all to the maiden edition of the CFO Luncheon, organized by our chamber, the Franco-Nigeria Chamber of Commerce and Industry, in partnership with Mazars Nigeria. This event brings together the chief financial officers of various companies with a clear mandate of sharing ideas and gaining insights on regulatory and other issues. The theme of today's event revolves around the Nigerian business environment, an important topic, especially as companies grapple with the new normal and seek to adhere to various emerging laws and regulations, including the CAMA 2020 and the Finance Act 2021, amongst others. The resilience of the Nigerian economy showed recently as we achieved a quick recovery from the 2020 recession. We commend the achievement of government in this regard. The latest GDP report of 0.51% growth shows that many sectors like agriculture, manufacturing, information technology, amongst others, are recovering quick and fast. Edo State claims that they are the heartbeats of the country. Are they? But there's one fact that is not in doubt. The heartbeats of most companies in Nigeria are in this room. Please give yourself a round of applause. The lifeblood of most organizations, liquidity and stability, rests on the prudence of the people in this beautiful restaurant today. Indeed, I believe that everyone will take away valuable strategies that will help in steering your various organizations to greater growth. On behalf of the chairman of French-Nigerian Chamber of Commerce, Alhaji Usman Mohammed, and the entire board, I hereby declare the maiden edition of the CFO Luncheon open. Thank you.
Thank you very much, Mr. Kunle Ahmed, representing the chairman, board of directors of the Franco-Nigerian Chamber of Commerce and Industry. So before we go to what we have next, I intentionally excluded some other board members because they are on the sides of CFOs too. But I think it should also be nice that I mention them. The CFO of Anglophone West Africa of Schneider Electric sits on the board of the Franco-Nigerian Chamber of Commerce and Industry. Mosi Ababaka, please. Is it there? Thank you. The CFO of SPI Oil and Gas, Mr. Paul Jackson London, sits on the board of the Franco-Nigerian Chamber of Commerce and Industry too. So since I've mentioned them, we are delighted to have a full house today. I think the house is complete. CFOs from JC Deco, UBA, BAFS, Entropos, Hello Product, Crescenda, AIML, Daystar Power, Total, CFAO, Owelinso, Cresson, IOTA, Schneider Electric, AXA Mansard, Union Bank, Leadway Assurance, FCMB, International SOS, GMT Nigeria, SDMO, Azar Finance, New Energy Services, CMA CGM, Swift Farm, Layla, Danone, African Delivery Technologies, Michelin, Moet Hennessy, Bolemark, Mudiame, SBM Intelligence, Sanofi, Gilvodan, Eco Atlantic, Spee Oil and Gas, Western Mercedes, Guerrero Power. We are all in this room this afternoon. So we officially, once again, welcome you all. So right now, I'll be going straight to the welcome address by the managing partner over at Mazars Nigeria. We understand that Mazars, of course, we know is a leading international audit and tax and advisory firm operating as a united partnership as one integrated team. They leverage expertise, skill, and cultural understanding to deliver exceptional and tailored services in audit and accounting, as well as tax, financial advisory, consulting, and legal service. Mazars globally has 42,000 professionals, and they are in over 90 countries globally. Mazars started in Nigeria. I personally know the story of Mazars here in Nigeria, coming from OGK and Partners that has been existing for over 40 years. And today they are in Nigeria, providing, of course, top-notch service to even some companies that are definitely here in this room today. So upon the rebranding of Mazars sometime last year, we decided to recognize them. So Monsieur Laurent, could I sit there? Monsieur Laurent, please. So as I call upon Mr. Ohabia, please, Mr. Ohabia, please. Mr. Laurent, please. I think it will be a good time to recognize Mazars for their rebranding, not just for the rebranding of the global office, but what you have done in Nigeria. If OGK and Partner was not good enough, Mazars would not come and work with you. As an international brand, you have done well. And of course, we have people in this room that have also recognized the great things you have done already. And on behalf of the board of the Chamber of Commerce, we want to give you an award of exceptional service for your rebranding and what you have been doing for the brand. So I will present it to Mr. Laurent to give that on behalf of the Chamber. Then you take your address.
Well, so it's now the time for you to be congratulated? Probably, yes. So on behalf of the chamber, the board, so it's my pleasure to give you this award in recognition of everything well you have done in this country. You're welcome. Thank you. A round of applause, please.
I'll just put this down. Thank you, Moses. Thank you, Laurent. It's a pleasure to be here. Good morning, ladies and gentlemen. First of all, I'd like to appreciate all of you and our incredible team. Peter, Pamela, we have a bunch of talented people that have made this work. So thank you for the recognition. Moses, you pretty much said everything, and we started. Mazars was founded in Europe some 75 years ago. We count 42,000 people, 26,000 in our integrated partnership, and 16,000 via the Mazars North America Alliance. And I think what sets us apart is the fact we work as one team, no matter wherever you are in the world. Work as one team, delivering exceptional service for tax, audit, accounting and advisory, consulting, financial advisory, sustainability, and legal services. As Moses said, in Nigeria, we started 45 years ago. We started as a local firm, but now we have four offices. We count about 120 people with 5 partners. In Africa, we're not doing too badly as well. The IAB rankings for 2021 puts us at number 7 in terms of people and revenues. I remember having a chat with Moses last year, and we discussed the need to create some sort of community where we will all come together and discuss topical issues from economics to tax laws to accounting standards to the economy. And that is why we have this signature event, the CFO Luncheon. And we thought we could do it quarterly, but it looks like we're settling for twice a year. Not confirmed, but you would definitely know. So once again, I welcome you all to this meeting edition. I look forward to having a chat with each of you personally and yeah, have a great session. Thank you very much.
Thank you. So as we're presenting the award to Maza, the Vice Chairman, Board of Directors of the Franco-Nigerian Chamber of Commerce and Industry walked into the event. Monsieur Mark Genizan first. So I'm sure he's going to say a few words, just a few things too.
Yes, good afternoon all. I am very happy to be here. Sorry to be late, but other issue to be done before coming here. I am very happy to be here, and really I am very happy for two reasons. First, to have the opportunity to have this very interesting CFO lunch, which is hosted by Mazars today, and probably we are going to have a very interesting conversation, and it is a way to develop our networking in the country, and probably it is good for all of us. And the second reason, I believe that since the beginning of the pandemic of the COVID-19, it is a second event, physical event, that the Chamber of Commerce is successful to organize. The first one was the opportunity of the nominated Nigerian ambassador to France, and we had the opportunity to host this very nice person. It was 1 month, 1.5 months ago, just before he left the country to take his office in Paris. And today it is a second event, physical event, that we have the opportunity to have on behalf of the Chamber of Commerce, and it is very nice. And for me, it is very nice. That means probably, even if the COVID-19 is still in the country, is still worldwide, and even if we need to keep our, I would say, our habits that we have taken during the peak of the pandemic, it means that probably one day, with the vaccination and so on, it should be possible to go back to what I am calling a normal life. And it is very important, this social interaction with our respective business, social interaction with our family. And for me, it is really a good sign. Thank you. I will not be longer. Thank you to be here. And I hope that you are going to enjoy the lunch and the discussion around the food. Thank you.
Thank you very much, Mr. Vice Chairman. Thank you. So I'll call on our first discussant, Mr. Peter. It's a flexible discussion, guys. So it's a CFO lunch. So we're going to keep another microphone somewhere around. So if in the course of presentation, it's discussion over our lunch, right? Over a 3-course meal. So in the course of presentation and you feel you want to interject and you raise a point, just wave your hands and then it's going to be interactive. That's what we want to do. It's not too much of you present and everybody waits for you to finish and all of that. If I have a question for Mr. Peter as he's talking, or Mr. Aliu in the course of his presentation, I will have to interrupt him and then ask the question so we can have a perspective as to what we're doing. So Mr. Peter, please. Mr. Peter is the partner tax and regulatory service over at Mazars. Mr. Peter.
Talking to the CFOs, as Ahmed has rightly said, you are the heartbeat of the country because you control the major part of the microeconomy, which are the companies and organizations you work for. So it's going to be an interactive session. Feel free to stop me and ask questions. The questions mustn't be for me because I'm just the partner for tax and regulatory services, and we are talking about the Nigerian economy. Of course, you know that is beyond me to do in 20 minutes. All right, thank you for understanding that. So we'll be talking about the Nigerian business environment, the good, the interesting, and everything in between. I wouldn't be the one to tell you the one that is good, the one that is interesting, and the one that is, and those ones that are in between, because like people who give motivational speeches say, perspective is everything. All right, so I'll be looking at it from the standpoint of the regulations. First, to look at the Finance Act, how the significant aspect of the Finance Act has affected the Nigerian economy. Then we'll also have a little stopover at the Africa Continental Free Trade Agreement and where we are on it as a country. Then we have to talk about the CAMA, Companies and Life Matters Act implementation, and a bit of the CBN Foreign Exchange Directives and Policies, ease of doing business, comments on that, macroeconomic indicator for just Q1. For just Q1 of 2021, and then effect of COVID-19 on business environment. Of course, we've seen some people who have made comments on how they've fared since the coming of COVID. So there's a little report about how businesses are surviving that. Then we just make a few comments on other recent developments. Some of your companies may have received letters from the FIRS about automation of VAT collection. So we just make a few comments on that. And I have my friend Aliyu who would also be speaking about non-resident companies, so he can answer some of the questions on FIRS. All right, so we'll move on. So with the Finance Act, it's now an annual tradition since Finance Act 2019 that every year with the budget of the country, there would also be a Finance Act to amend the tax laws and other laws. So we had the Finance Act 2019, which was effective in January 2020, and then we have the Finance Act, the most recent, which is the Finance Act 2020, effective January 2021. So just a few of because Finance Act has been discussed in various fora, so I wouldn't want to overbeat it. So just a few of the things that has happened, just a few of the amendments. For instance, in the Personal Income Tax Act, you have a redefinition of the gross income. I know some of your employees would have reached out to you to say, why is my net pay that used to be 1 million naira now 800,000 naira? Just because the Section 33 of the Finance Act was redefined or has redefined the Personal Income Tax Act, gross income. Now with the revision of gross income, you have lesser amount to claim as tax relief, and that means more tax to pay. We also have, as another amendment to the Personal Income Tax Act, exemption of low-income earners earning minimum wage of less than 30,000 naira and below on a monthly basis. They are now exempt from paying minimum tax. They're also exempt from paying personal income tax. I expect the CFOs in the room to be aware of that if you have employees or if you have wage earners who fall below the minimum wage of 30,000 naira on a monthly basis. The Finance Act has also made a clarification on whether compensation paid for loss of office exceeding 10 million naira would be taxable. So we had something like that in Finance Act 2019, but with the Finance Act 2020, it has come to say that compensation less than 10 million naira would not be subject to capital gains tax. Only the excess of 10 million naira would be subject to capital gains tax and then remitted within the required timeline under the Personal Income Tax Act. We also had a few amendments in the Value-Added Tax Act, where the Value-Added Tax Act has redefined, or the Finance Act has redefined taxable supply to refer to goods, especially to confirm that, just a way of confirming that goods supplied by companies that are not in Nigeria at the point of supply would not be subject to VAT. Just a further clarification of what is an exported service from the standpoint of the foreigners or non-resident companies. We also have it because some of the airline operators have gone to meet the federal government to say our margins are shrinking. We didn't do anything during the COVID, so we need to have some concessions from the federal government. So the federal government came up with an exemption of commercial airline ticket from value-added tax. In addition to that, importation of aircraft and spare parts are also exempt from value-added tax. If that is good, then it's fine. Of course, you know we have people who use, some people from some quarters have argued that flying, being an air flight is a luxury, so why do you want to give that exemption to the high people in society, whereas you're not talking about people who use commercial buses? But that's how you want to look at it. Okay, so we also have some amendments in the Companies Income Tax Act so that we're faster. We have an amendment that has reduced the minimum tax from 0.5% to 0.25%, but this is for years of assessment or filings or returns that are due from January 2020 year of assessment to 31st December 2021. So effectively, all filings, CIT filings that are due to be done between January 2020 to 31st December 2021 would have minimum tax subject at 0.25%. We would be wondering what would happen after 31st December 2021. Perhaps we do not need to preempt the government and just wait for Finance Act 2021. That might give us the answer to our questions. But I, for one, have a comment. I do not think that the turnover should be the basis for minimum tax. I mean, Ali will talk about that later, but that is my personal opinion because you have companies who do high volume, low margin business, and these companies are complaining when you put your minimum tax on turnover. So how minimum is it in that case? All right, so we'll talk about that when the time comes. So the FRS has also improved, maybe with COVID, to accept that notice of assessment and objections under the Companies Income Tax Act can be done through courier service, electronic, all of those things are now acceptable. Now, pioneer status is now for an initial period of 4 years for small and medium-sized companies, and an additional 2 years, so making it a total of 6 years. You know, what we had before is 3 years as an initial pioneer status holiday, and then additional 2 years upon satisfactory performance from the standpoint of NIPC. But then you have small and medium company having an extra incentive. So try to, if your company provide pioneer activity or pioneer products, you may need to reach out to the FRS and your tax consultants. We also have the FRS coming now to say that companies operating in the free trade zone would be required to file tax returns. Of course, you're not to pay taxes because the Free NEBSA Act does not require you to pay taxes, provided you are carrying out approved activity and you're an approved enterprise. Just highlights, there was an establishment of Crisis Intervention Fund, unclaimed dividends in a listed company and in all bank dormant accounts are now to be transferred to the Unclaimed Fund Trust Fund. I think I have someone from UBA, you would probably tell us how that is going. And the federal government has put a commitment that they will be available to refund these monies to the owners if they come for them. So that's that about the Finance Act 2020. So just a little comment on the African Continental Free Trade Area Agreement. You're all aware that the Nigerian government has signed the Buhari's administration has signed the African Continental Free Trade Agreement. On January 1st, 2021, this AFTA was launched. However, it promises to be one of the best things happening in the African continent because Africa accounts for 2% of the global trade. But when you come to trade between African countries, it is just merely 17%. And when you compare this with what happens between Asian countries that do 59% and also 68% for European countries, you would see that we are far below what we would say is the benchmark. So now with the signing of the African Continental Free Trade Agreement, it promises transformation across the African continent. It's going to create the largest free trade area measured in terms of the participating countries. I think it's just Eritrea who hasn't signed to be a part of the African Continental Free Trade Area Agreement. And Africa, with a combined GDP of $3.4 trillion and over 1.3 billion people in 55 countries, are parties to the African Continental Free Trade Agreement. Now, there are concerns because, you know, before the exit of Donald Trump, he was saying we're going to build wall, Mexico wall, Mexican wall. We do not want people coming in. There were immigration issues there and there. You see the Great Britain talking about Brexit, but then Nigeria is talking about AFTA. We want to integrate. Now, we have concerns. People are saying, have we done our homework very well? Have we enabled our economy? Have we stimulated the economy enough for companies in Nigeria to participate effectively as members of this free trade area? These are some of the concerns. I'll leave us to answer those questions. There are also concerns about the quality of goods that are imported. I hope Nigeria wouldn't be a dumping ground or other African countries be dumping grounds for substandard products. There are also concerns about a treaty, I don't know whether you want to call it treaty shopping, where some of the countries who have committed to be part of this free trade area allow other countries who are non-participants to move goods through their countries. So these are issues, and we are wondering whether this would help us save the infant industries we have in Nigeria. These are issues we have in African Continental Free Trade Agreement. I need to mention at this point that so many countries have not, even though it's been ratified in all of this, most of these countries, but most of the countries are yet to implement the provisions of the intra-African trade. Hopefully, the African Union will respond to these implementational challenges. Then moving there, we go to CAMA. CAMA, for a very long time, the 1999 Companies and Allied Matters, 1990 Companies and Allied Matters Act, nothing had happened there. There was no amendment. But then in 2020, we have a repeal of the old CAMA and then an enactment of a new CAMA 2020. This CAMA 2020 has been acclaimed as one of the good things that has happened because it has made robust changes to the regulatory framework for the administration of companies. It has introduced, for example, that one person can set up a limited liability company. You have disclosure of significant control, minimum issued share capital. There were changes around there. That's for CAMA. However, there are challenges because if we have legal people here or people who talk to secretaries, you would see that people have not been able to access the Corporate Affairs Commission, even their portal. Things are not working out as it should be. So it is a bit too early to appraise how good the CAMA 2020 is for companies. Well, so that is it. So move on to CBN, Foreign Exchange Directives. I will try not to talk a lot about this. Of course, if you're checking, maybe I need to give you the exchange rate as at today, looking at the Aboki FX apparel market. You're seeing that USD to Naira on Naira to USD is 498 Naira per 1 USD. And then you have Euro at 597 to 597 Naira to 1 Euro. And then you have the pounds at 700 Naira to 1 USD. That tells you all the story because that's the Forex crisis. We're in a crisis as far as foreign exchange is concerned. So I wouldn't need to talk about that. But I know CBN is trying its best because I understand that it is not easy to be a regulator when it comes to monetary policies. I used to know then that you'll be told that the economy is like a pool of water. Drop one here, there are ripples. So we just want to say the CBN and probably the participating banks will sit up to their responsibilities of helping us save the economy. We talk about ease of doing business. The vice president has been doing a lot around the ease of doing business. Of course, part of the outcome of the ease of doing business is probably the enactment of CAMA and also the commitment to annually come up with a finance act. There are other things around ease of doing business. I think we're not there yet, but I think we're doing well a bit. There are strategic reforms going on, even in the free trade zones. There are also incentives provided to SMEs. Of course, the target I heard is that we want to be among the first 100 countries in the global ease of doing business evaluation. I hope we get there. So many countries have been able to set up state committees to champion the ease of doing business reform. So that's just what I want to say about the ease of doing business. But then there are some issues, even from the FRS perspective, for the fact that they've set up electronic ways of filing and also paying your taxes just to reduce fiscal interaction. That is a good step towards accelerating the ease of doing business. Now, if you want to incorporate a company, at the point of incorporation, you're getting your tax identification number. That is quite a good one when it comes to ease of doing business from FRS and CAC perspective. Now, just give you a little snippet into the macroeconomic indicator because the topic is about the Nigerian business environment, the good, the interesting, and everything in between. Just going to flash at you the significant statistics here. I have average interbank call rate at 18%. I have monetary policy rate as at March 2021. That's the end of the first quarter at 11.5%. And then the Brent crude is sold at $71.76. Of course, Nigeria is currently producing, as at the end of Q1, 1.72 million barrels per day. Ahmed talked about the improvement in GDP, growth in GDP in the first quarter. year on year, 0.51% growth year on year, and that is the second successive growth in GDP. If you check what we did in the last quarter of 2020, that technically took us out of recession. Technically, we're going to talk about whether we are out of recession, really. Of course, the inflation rate is still up, 18.17% as at March 2021, though it dropped a bit to 18.12 in April 2021. It is just a slow growth in the economy. We hope that the policies will get us out of there. So finally, I'm going to talk about the comments of companies on how they've survived COVID-19. Many companies have said that 80.4% of businesses reported that they were likely to lay off their staff, citing prolonged period of pandemic, inability to pay staff, poor sales, restricted movement. They're also asking for key areas, support in key areas in terms of cash flow, in terms of access to government funding, in terms of access to markets, in terms of private sector enterprise support to provide funding and business support. Those are the requests of some of the SMEs who responded to this survey. And I think you're there. So finally, my recommendations are that the tradition of accompanying the yearly appropriation bill with a finance bill has kept the Nigerian tax regime in constant motion. So we encourage the FIRS and the Nigerian government to constantly come up with finance acts to supplement areas we think needs to be supplemented. I also encourage the CBN to do more in saving the economy from another recession and economic crisis. And security, I was tempted to change my slide because of the high rate of insecurity in the country. I expect the government to declare a state of emergency when it comes to security, because our farmers no longer go to the farms and, I don't know, we can have the money and then we wouldn't have the food to eat. So please, security is an important issue. And to every one of us here, I charge you, whatever you need to do to keep the Nigerian economy surviving, please do that as CFOs. Thank you very much.
Thank you, Mr. Peter. Mr. Abdullah Aliyu. Mr. Abdullah Aliyu is the tax controller, non-resident person over the Federal Inland Revenue Service. Sorry, thank you. So we can have our main course now while he's speaking.
The board members of Franco-Nigerian Chambers of Commerce, the CFOs of highly profiled rated companies, ladies and gentlemen, good afternoon. I am delighted to be part of this maiden luncheon. But when I got the invitation, I was not told that it's going to be like this. But I think I'm happy. By the time I look at the back of those companies that are sponsoring, once they have paid their assessment, I think we are going to laugh that we are going to make our target for this year. So please, my appeal, please, all outstanding assessments, just make it good. June is just by the corner. Those that are using 31st December as accounting year. So that's my first appeal before I go to the menu. And maybe I will just respond on the Finance Act before I go. It's part of my listing, but please, I want to make it clear that Finance Act is not the sole function of FIRS. Please, get it clear. All of us, we are all stakeholders. In fact, at a point, FIRS will just try to lobby together our input to go in. So it's a job of all of us. Anything that you see that is not good now, the good thing we have with this administration that the window is still open. So you can participate and make changes. So it's just, when Peter was making presentation and one was saying Finance Act will come from FRS, it's not the sole product of FRS, it's the sole product of Nigeria. Because I know your consultants, they are very, very influential in Finance Act. Mazars is part of it. So I think let me make this clear. Well, what I was given is just to demystify tax returns by multinational enterprises. what Moses told me that the multinational enterprises are finding some kind of confusion or difficulties in filing returns. So I should make it as ABCD so that the big ogas here will go back and ask the tax managers, oh, did you do this and that? So taxation strive on two themes, on the law and in the tax administration. The law is just like a finance act we are talking about. It's a legislation on the tax, on the fiscal policies of the federal government, legislated by National Assembly. What we do in FRS is do the second part of it, to administer the law. Administration of tax law is comprises of compliance and enforcement. So filing tax returns is part of the compliance. If you want to test whether your company is compliant, it's an assignment I'm giving you. Go and apply for tax clearance certificate. It will tell you that, yeah, you are compliant or you are not. Because all the parameters at the end of the day, you will see. So there are various returns you need to be filing with FRS. And there are basic rules guiding filing those assessments. We have what we call self-assessment regulation, 6/2011. All the taxes FRS administers are guided in self-assessment regulation. Maybe except very few that are coming up with the imagination of maybe transfer pricing returns, country by country returns. So these are the only ones that are not contained in the self-assessment regulation. So I will take those taxes based on the self-assessment regulations. I will start with value-added tax. These are monthly returns that you need to file on a monthly basis. Value-added tax is just a transaction taxes that's huge because the final burden of the VAT goes to the consumer. What you do as companies is just to do the agency function, pass it, and then make the returns to FRS, tell them, well, I have done my own. So what you need there is a specified form for these returns. At the end of the month, what you need to measure out all your VATable transactions during the month, apply the VAT rate, and then you have your input VAT, your exemption, depending the industry or the kind of product you are dealing with. There are some products that are not VATable. There are some that are exempted. For instance, you are in export, or you are producing maybe fertilizer, which is not VATable at the end of the day. How do you convince the government that, oh, you have a refund? Because at the end of the day, when you are dealing with non-VATable good, you will end up with refund. So you need to convince the tax authority that, of course, you earn that refund. So in filing your VAT, you need to accompany it with schedules of those claims. So it's simple. On a monthly basis, just your total output VAT compared with all your input VAT, and then file and get it. And it's still, and VAT you also pass, there are about 3 categories of VAT. There are those that you can claim input VAT. There are those that you can come capitalize when you are buying fixed assets. And then there are those that you can expense. Those are services. So you need to know all this. And by the time, don't be surprised, you file your VAT and then you attach all the settlement, FRS will be turning it back to you. So these are the categories of VAT that you need to take note of it. So this one is common that everybody knows. So it has been demystified, I believe. Then the next one, you have the personal income tax payee. Payee are taxes you are taking from your employees. So under self-assessment regulations, on or before 31st March, you should file your payee returns to the relevant tax authority. Okay? Then you know we are going to be deducting that payee on monthly basis or monthly salary, that's from the payroll. So before the 10th day of the next month, you need to remit what you have deducted. And then when the year starts, you need, before the 31st of January, you need to prepare what, simply, I mean, just maybe make it simple that as an estimated tax. The total emolument of your employees, the reliefs, and then the taxes expected from that employee. You need to file it on or before 31st January of your employees. So there are 3 things you need to do in payee. 31st March, your total tax returns. On the first day, on or before the first day, all deduction you did in the previous month remitted. And before 31st January, give a projected tax expectation from your employees. That's simple, that you need to know about that one. So the next tax I can take, maybe let me take capital gain tax. Capital gain tax is amended with 2020 Finance Act. So now, the two taxes I mentioned, VAT and PE, they are on monthly basis, okay? But capital gain tax now, we have taken a new dimension with 2020. Now we are going to file it twice, on or before 30th June or on or before 31st December. So in between, when you have a transaction between that one, you will file it. But I don't know, when you do the transaction on 30th June at 5 p.m., I don't know when you will file it. So Mr. Peter will help us with that one. He's a consultant. So because here in the capital gain tax, there are some assets that are exempted. Those for assets that are used for international air and shipping, they're exempted at that one. The essence of the amendment is just to locate the education of the owner of the assets. That's the emphasis. The next tax that we have is petroleum profit tax, PPT. It's a very wide industry, and I can see there are many CFOs from that area. Petroleum industries is divided for tax purposes into upstream and downstream, and they all have a different fiscal regulation for that one. Those operating in upstream, they are regulated by PPT. Those operating in downstream, they are regulated by company income taxes. Okay? So what you need to do under self-assessment regulation, before the end of the second month, that is before the end of February, you need to prepare your estimated budget, your estimated tax, and submit to FRS. Then you start paying your installmental payment on or before the end of the third month, at 31st March. Because PPT, they're operating on actual year basis, and they are using fiscal year of January to December. And then the final return should be filed on or before the end of the fifth month, that 31st May, with the final installment. So along the way, maybe you have given your estimate, but along the way there is changing in crude oil prices. You have variation and amendment. You can submit it along the way. You can submit it. It will affect your estimation, but you can submit it. But at the end of the day, by 31st May, you are filing your final returns, including the final installment. So that's the returns expected from PPT. Those that are operating up to 200 meters, inland basin and up to 200 meters, they are regulated by PPT. And those that are operating beyond 200, that's 201. I don't know, do you call it above or below? Because you are going deep. So is it 200 meters and below or 200 meters and above? But anything from 200 meters to whatever limit, you are regulated by Deep Offshore Inland Basin Production Sharing Contract Act. So they have a fairly better rate because PPT is 85%, while the Deep Offshore Inland Basin is 55%, because it's a kind of incentive given to those companies because of maybe heavy investment they have in those areas. So these are the basic things you need to know when you are in oil and gas. Stamp duty, that one is, I don't think it is it important? But it's important. Because any contract you do, any agreement you enter that is not stamped, in event of litigation, may not stand. So there are two basic products in stamp duty. There are that what we call ad valorem instrument. There are those that have fixed rate. So for returns, ad valorem have just 30 days, and fixed have 40 days. So, but in events you have delayed, you have the commissioner of stamp duty give you an assessment, then you need 21 days to make that returns. Under company income tax, the self-assessment, the due date for filing of self-assessment is 6 months after your accounting period for existing companies, or 18 months for new incorporated companies. So you need to file your tax return based or in line with the provision of CETA Section 55. What are the content of Section 55? You need your audited account, your tax computation, your capital allowances computation, and then your self-assessment returns with evidence of payment. The CETA 55 applied to both resident and non-resident companies. Because Peter is telling the non-resident, and we'll talk about non-resident companies, of course. So 55 covered both resident and non-resident companies. So it applies. But if you come to the non-resident companies, there are two maybe categories. You have those that have physical PEs. Those normal, the brick and mortar PE, at least you can identify them. You have office, or they have dependent agent, or they have a turnkey project. These are the physical PEs. But with the Finance Act of 2019, there was an amendment to Section 13.2, which brings the introduction of digital economies into taxation in Nigeria in form of SEP. That's the significant present order. I don't know why, Moses, you are writing. I don't know why you are writing. So the significant economic present order came into existence. That's bring the digital companies into TaxNet. But this one, in fact, the last three I have, the SEP, country by country reporting, and transfer pricing. These are the three returns that I have. But I want to tell you that all these three, they are coming as a result of tax competition. It's a global issue now. It's not only to Nigeria. Don't say SEP is a Nigerian listen. In 2013, the big boss that is regulating or advising on taxation, the OECD and the G20, they came up with what they call BEPS. They have a project. They came up with about 15 points, action points. Action point 1 is dealing with addressing the challenges of taxation of digital companies or digital economy. There's a lot of discussion by OECD, UN, for a very long time to come to a consensus on how to tax the digital companies. But up to today, they have not come to that conclusion. Many countries decided to take unilateral measures. If you say it, based on our own say, we have taken unilateral measures. Mazars is part of the 2019 Finance Act, so I was not there. Okay? So many countries have decided to take their own fair share of taxation because a lot of things have changed. You know, in fact, if you talk about cross-border, you have to refer it back to the World Trade and then the League of Nations. That's how it all, because there is a cross-border. Somebody will just go to your country, generate income, and go back. So the competition is there. Those companies that you have in your country will not be able to get income again. You will not get the tax. So you'll move to the other, back to its own jurisdiction. So that's why the whole global body, they are having that problem. There's a challenge. It's not only to Nigeria. It's not only to Africa, including even the developed countries. The fight is big there. So many of them decided to approach the digital with unilateral measures. Yes, Franco Chamber, French, and US. I don't want to talk there. Everybody, I think, have an idea of that one. So many countries have used that. And so eventually we came out with a position in Nigeria that, okay, we are going to take SEP as part of our own measure to tax the digital. In fact, it's very few countries that use SEP, maybe 3 or 4. But it's not popular. Most of the popular list of taxation of digital economy is the digital service, like the DST. That's what they use. So what Section 55 is requiring the non-resident, including the digital, is to file based on 65A as amended in 2020 Finance Act. The questions I used to receive on daily basis from consultants is that, how do we file? I don't have an asset in Nigeria. I don't have a bank account in Nigeria. I don't have an employee in Nigeria. I don't have debtors that have creditors. How do my financial look like my balance sheet? Well, my simple answer is that you can file nil balance sheet. Well, of course. At least that's what is low. So that's the good part of what we have. If we have challenges now, the window of Finance Act is still there. So those of you that are affected, you can come up with a harmonized position. First, the finance committee bring it out. So, but all this one, the unilateral measures, the SAFE, all this and that, by the time OECD come up with a position, I think all this one, they are all temporary measures. That's what I feel. They are all temporary measures. By the time OECD come up with a position, this is how we are going to tax these digital companies. I think all other things will come to, I think. So how soon they are coming with it, I don't know. That's why maybe we can ask the directors of chambers of commerce. Maybe they'll have an idea. So that's it. Well, because of your time, transfer pricing, that's another return that you need. But do I need to talk on that transfer pricing? Maybe we don't have. I should continue? Fine. You know you are multinational organizations. And in most cases, you have transactions with your related parties. We call it control transactions. It's part of the BEPS project. Action point 8 to 10 is just specifically talking about transfer pricing, ranging from intangible to risks and high capital. So, in fact, the OECD and the BEPS, they are advisory body. They can just tell you this, go back to your country and domesticate it. So that's how we came with revised TP regulation in 2018. You know, we had it in 2012. But by the time BEPS came up with an additional directive based on action point 8, 9, and 10, we came up with revised transfer pricing regulation. So what you need to do, since we are talking about returns, you need two things in transfer pricing returns. There's what we call declaration, and then disclosure. Declaration, what you need to tell us that this is my parent company, this is my associated company, this is my subsidiary, this is related to my parent, all your connected parties. There's a prescribed form, you fill it once in a year. Do you know if you miss it, do you know the penalty? It's 10 million naira on the first instance. And then, help me now, Peter. I know you do it now. Is it 10,000 naira every day? So it's just something you do it once in a year, except if you have another changes. The changes that may be acquisition, merger, sales, and other things. That are the major thing that they have to do, change it in the structure of the company that you need to file another declaration. But disclosure, you need to file it on a yearly basis. Okay? So the disclosure now, you have a connected party transaction. In fact, before the BEPS, we had it in CETA 22, call it artificial transaction. We are just disallowing that one, just disallowed. But the BEPS are saying, no, you should not be disallowing. Go and do economic verification of that one. What is the market value? The auditing aspect of it is not what we are discussing. We are discussing about returns. So the returns is declaration and disclosure. So you need to disclose, you have a related party transaction. You have a transaction with your parent company, with your associated company, or a company that's related to your parent company, or controlled by is what you need to do on a yearly basis. So if you fail to do that one, the penalty is another 10 million naira, and then 10,000 naira every day, the failure continue. Then you have another one, country by country reporting. Still is part of the BEPS, action point 13. And then in our tax treaty, there's an exchange of information. Most of this one that we have exchange of information, Article 26. So there is a need to increase transparency in disclosure, since those companies, they are operating cross-border. So there is high level now that you need to be exchanging that information between tax authorities and tax authorities. Simple fact now, the whole world is becoming a global village. For you to take a profit here and move it there is no longer. What you are expected to do for filing of country-by-country report, you need to do notification. So, and then filing the country-by-country report. Notification is for you to tell us, okay, this is your ultimate parent company, this is your surrogate. Oh, sorry, let me go bother with this one. What you are just need to tell us in notification that this is the person that is responsible to file my country-by-country report. That's what it simply means. So the surrogate, the ultimate parent company, or the constitution, they are all at responsibility. Just tell us this and this is a responsible person to file country by country report. Then you need to prepare the report itself. So, CBC returns. There is some comprises of notification and country by country report. They are all in a prescribed form. The country by country report, you need to tell us all the group, the global group. We need to tell you if there are 50, you have to put all of them. The turnover, all what they have. So you are now giving us a clear picture of what you are. Okay? If you have assets here and you have more revenue there, you have less employees there, all this one you need to depict it. So it will help in transparency of your report. By the time you give it, so everybody will just be able to do it. Because all what they are just trying to achieve is that at least everybody should be able to take his own fair share of tax because of the residency rule and then the source rule. If you are sourcing any income in any country, you need to at least drop that tax based on that source rule. And then if you go back to your resident country, then you should pay your tax based on the residency rule. So, sorry to take you back to payee. Ordinarily, payee used to file to state internal revenue services. There's another category of payee that is due for FRS. Please note it. There are non-resident employees that you have. Payment of individuals or taxation of individuals in Nigeria, we are using residency as the cutoff. And the cutoff date is 183 days. So if you have anybody that you engage, that work for you, a consultant, a professional, whatever thing, you have somebody on temporary work permit that work for some few months, less than 183 days, you're supposed to take the tax and remit it to FRS. It's not due for state internal revenue. Those of you in oil and gas that are in offshore platform, okay? The workers in offshore platform, okay, fine. The water level of Nigeria for tax purposes is divided into 3. There is what we call littoral states or boundaries. That one is belonging to state. There is territorial water and economic exclusive zones. The 2 zones belong to federal government. So if you have your own offshore platform on those 2 zones, all your employees, the payee on those employees, they belong to federal government. So we are coming up, if you didn't receive our letter, you are coming up with that one. Soon you will get it. Sir? So, it's an area that FRS, honestly, we have not tapped it. That's the essence of the non-resident person tax office. That's the assignment we have. So, lest I forget, I think I better notify because you will soon see our letters requesting for that taxes that is due to federal government. So I think these are the commonly returns we file. But, filing of returns, how many minutes? Sure. Filing of returns is not complete without payments. You cannot just file return without payment. It's not complete. It's not complete. But you have a chances of benefiting installmental payment if you start filing, and the installmental payment should end on or before your due date. So if you want to plan your installmental payment, you have June 30th to file. Start it from January so that it will end by June. And the payment for those that are operating in foreign currency, FRS is accepting 3 currency basically. That dollar, euro, pounds. Yes, dollar, euro, pound, and yeah, that's the 3 currencies that FRS is accepting. While you may, along the way, maybe during filing your returns, maybe some challenges, of course. Challenges ranging from documentation, a lot of documentation, network problems, and overlapping taxes. One organization is paying payee, VAT, stamp duty, capital allowance. So there are so many laws that are overlapping. So the challenges you'll be facing are both either statutory challenges or operational challenges. Operational challenges, I think, FRS will have woken up. In fact, all the manual process in the next few months, I think, will be away with it with the launch of the tax promax. I believe many of you have received that tax promax notification for you to file your tax returns online. So In fact, even this in receipts, withholding tax in foreign currency, I know it's part of the challenges most of you may be facing. By the time Tax Pro Max is on, that one will be just history. But for those that are complaining about the laws, the taxes are too much, I don't need to file CBCR, I don't need to file transfer pricing, I don't need to file income. These are laws, these are statutory. I don't have power, or FRS doesn't have power to resolve those ones. So, and then that's when they are all global. So, with 2 minutes, I think I've proposed solution. That's tax transfer pricing. You know, it is another headache when you are filing. You have some challenges. You need to file with the tax office you have, and then file the same thing in the transfer pricing office. There's a ETP platform. It's a platform you can use it. Many may not know, but it's a platform. You don't need to be working up and down. It's up and down. But the best thing for you to avoid the 10 million naira, start early. Start early. Don't wait at the due date. You know the difference is rush time.
Service of notice of assessment and objections under the CITA may be done via courier service, email or other electronic means as it may be directed by FRS in the notice. Tax Appeal Tribunal may conduct its hearing remotely via virtual means, using such technology or application as may be necessary to ensure fair hearing. Is that obtainable or is just the law?
Of course, I do send all my this in now. Okay, do you expect me to go and meet Google or Facebook? I don't have them. So I communicate using email. It's effective. In fact, okay, I have just a chat that I have with one of the tax consultants. He's saying that, okay, hello? Anything you can object, you can send objection. So email is a valid means of communication now, because the genesis, it was a court case of which FRS eventually lost. And then I think finally that's how we just make it as part of the law. But you know, still, some consultant and company are still insisting. The tax consultant, now you have this in the chat with him. He say, the company needs hard copy. I say, we have sent him soft copy. He has a copy, but this company insisting to have the hard copy. So it's a valid means.
Thank you very much, Mr. Abdullahi. Please, let's recognize him once again for helping us demystify a lot of things around. So do we have any question, comments? Of course, definitely we will have comments. Kui, let me start with Kui, please.
Thank you very much for this luncheon and the very high level of presentations. I'm the CEO of Quick Delivery. We enable esteemed corporations such as the ones represented today to reach their e-commerce transformation goals. I would be interested to know what is the likelihood, what would be the likelihood of having a single digital market at the regional level in West Africa, because in my opinion it will be a strong factor in fostering regional trade, especially in the perspective of the digital transformation of African commerce. Thank you.
Okay.
Bonjour à tous. My name is Stella Osayamebon from Modiame International. I'd like to ask, because Peter mentioned something about turnovers should not create room for more tax. I'm asking the taxman, because most of us, we do businesses that generate turnover, but little or small profits. How can you help us in that regard? Because the tax is just way too much. And multiple taxation is just crazy.
CBCR. On the CBCR filing, you made some exemption recently. There's an announcement in the last country-by-country reporting. There's some sort of amendment in the last 1 or 2 weeks that I tried to read it, it's still not very clear. If you could please clarify.
Explanation about the PIT for non-resident, where you clearly explain at which point of the cutoff of 183 days and the tax is due either to federal inland revenue services or local administration. So my point was, do you have a kind of compensation between the two administrations where you have companies who cannot tell at the beginning of the period, if the person going to stay for 183 days or more, because, we are on a project basis and the project can last 3 months. And finally, we end up, spending the whole year with those space. That's a real concern for me.
What we do is taxing those ones. If they decide to come together, there is one thing, we don't have group taxation. So if they decide to come together, they have to report as a single entity. So that's a business arrangement. We don't temper into that one. But whatever they agree to do is the entity that we look at. So I think but I think maybe Peter will expand on that one. PIT, for those that are staying more than 183 days. That's what I'm saying. Normally, individuals are being taxed by states. But these categories of individuals that are staying less than 183 days that are taxed by Federal Inland Revenue Service. Peradventure, the man exceeded 183 days. Transit him to state internal revenue in your returns. So make it proper. File the returns, and JTB is there. So when there is overlapping of taxes between state and federal, JTB will take a good action on that one. So that's it. The cutoff is 183 days. You have him, maybe first you have on temporary work permit, 90 days. You renew it another 90 days. Eventually exceeded to, he's no longer under Federal Inland Revenue Service. He's going, but you have remitted his taxes for those periods. And you have not taken him to Rivers State, to Lagos State, to Edo State, filed to Edo State. The remaining balance, just notify the FRS. You can send it to JTB, will resolve that issue. Yeah. Exemption of CBCR. Okay. There are so many issues in CBCR. The exchange of information have some kind of criteria for you to do. We have not yet passed that one. We have first step. They are coming to evaluate FRS for the second step. So there are kind of criteria we have to fulfill. We have not yet finished that one. That's why we are seeing the exemption you're referring about. And for you to be subjected to CBCR, you have to have a group turnover of about 160 billion or 750 million euro. So if you are not in that category, you are still exempted from CBCR. So I think that one will take care of minimum tax using turnover. Madam, it's low. It's 33 issue. But Section 30 is an anti-avoidance section. Applied to both resident and non-resident companies. It has some criteria that by the time you file based on Section 55, you realize that there is no assessable profit. Or the assessable profit is so low to the extent, or in the eyes, in the opinion of the board, that is not a fair and true presentation, then they can subject to Section 30. So it's an anti-avoidance. So the minimum tax using turnover, well, you may criticize it, but what is the option? Company income tax is based on profit. If you can truly, that's why we have the self-assessment. If you can truly disclose and you have all your facts that you have lost, there is no tax on loss. The tax is on profit. So what you need to do is to convince the revenue authority that you are incurring losses. And then taxing based, that, as I said, is a law, so that you can take that one to the Finance Act Committee 2021 and make your presentation. You may will make some changes there. Okay, thank you.
Okay, please. So our speakers have done very well. But of course, one of the purposes of this event is to create a room for idea sharing. So the dessert period, you have to still remain, share ideas amongst yourself.
It's about withholding tax credit notes. So you get to see a lot of companies who do contracts, construction, and they have credit notes. And at the end of the year, they do not have enough taxable profit to offset these credit notes, to offset the taxes with the credit notes. And they come back asking the FRS for a refund, as stated in the law. It doesn't happen. Rather, the FRS comes for an audit, and at the end of the day, if you're lucky, which is almost not possible, to have a new liability, the FRS would ask you to line and be in queue for, there's always a queue. I've had to stay in queue. We have a budget for withholding tax refund. You just stay in a queue. 2 years, 3 years, it doesn't come to you. So I'm thinking, I've actually thought of it, and I have two things in mind. Is it possible for the FRS to make withholding tax credit notes a negotiable instrument, like you have EEG? So instead of waiting, since it's seeming obvious that the FRS does not have enough money to refund, can people negotiate this to people who have taxable profits and have this discount? I'm just a thought in my head, so that it saves you the trouble. Thank you.
Yeah, Mr. Peter, converting withholding tax credit note to negotiable instrument. Oga is here and he's part of Finance Act 2020. You can pass it to him. It's low. But it's funny. If you say you have a refund, and at the end of the day, an audit is conducted on your tax, on your client, or your additional company, at the end of the day, you paid more taxes, then maybe you have not actually disclosed your true position. Because whatever they are assessing, they are not forcing it. It's a fact they will give you. Did you actually have that transaction? And if that transaction turned to be another thing, which means you have not truly disclosed your true position. So, but this thing, the refund is in two forms. You can get it by credit method, you can get it by cash. So in credit method, you can forward it. You are at least you are in a going concern. Okay? You are going concern to avoid if you are afraid of this. But in fact, I prefer a comment that can beat the chair and say, come and audit me. And I bet you, after auditing, you will still give me that refund. You will get the refund. But 90%, based on experience, I was investigation before commenting this one, 90%, those that ask for refund, they end up paying more taxes. Which means the self-assessment regulation is little bit abused. Yes, because the self-assessment regulation is giving the trust on the taxpayer. Prior to self-assessment, we are using government assessment. Okay? So we will do the assessment in the office and pass it back to it. Take a long of time with delay in litigation. Then when voluntary compliance is coming on 2011, if I say, no, please, pass it back to the taxpayers, give them that honor and integrity, trust them, let them file it, self-assessment. But by the time they file, you can do a spot check. So if you have a refund, or your client have a refund, yes, there is a procedure for audit to confirm the veracity of your claim. When it is okay, fine and good. When it is not, if it is okay, bring additional lesson, tax liability. But in some cases, you may find out, okay, in one line of tax, you may have a refund. In the other tax, you will have to pay. So at the end of the day, is the true position that will avail. Because the assessment they will come at the end, nobody is imposing it. You have right. Taxpayers have absolute right. You can go to, you can go to litigation, you can go to TAT, you can go to up to Supreme Court. So nobody is imposing. So if it turns at the end of the day, which means you have not given a true and fair position of your tax. I think.
Mr. Blair, thank you very much.
Thank you.
Can we recognize him, please? He has done a fantastic job. Please. So our speakers have done very well. But of course, one of the purposes of this event is to create a room for idea sharing. So the dessert period, you have to still remain, share ideas amongst yourselves.
Purposes, just have his contact so that I will not file your TP returns while the man have leave transfer pricing is it Yenagua. And then the following day they say, okay, bring 10 million naira refund. At least have contact of that particular officer. Because each tax officer has his own email address. That's a fact. The tax controllers, the email address is opened. And then maybe the TPS stuff you can have. So with this one, I think you can avoid sending it to a wrong email. I think that will solve the problem. Okay, thank you.
Thank you very much. Thank you.
Good afternoon. There's a popular saying that taxes and death are the only certain things in life. So I believe that today, this afternoon, has been a very interesting talk, something all of us are concerned about. We all somehow live in some kind of trepidation about the taxman. And even those of us who are Christians, it's been going on since the time of the Bible. You all know what happened when Jesus met the taxman. So here we are again in 2021. But I think we've had a very colorful and interesting presentation by one of our guest speakers, Mr. Abdullahi Aliu, I'm promising that I'm still going to challenge him this afternoon because you never can get all the answers to the tax questions. However, on behalf of the Franco-Nigerian Chamber of Commerce and Industry, it is my honor to present to him today this plaque in recognition of his presentation this afternoon.
Thank you very much, Franco-Nigerian Chambers of Commerce. Well done.
I would also like to make a presentation to Mr. Peter Mofia for his presentation today, which we really appreciate. And he has raised some very valid points, which I support him with. Unfortunately, the taxman has passed them on to the government and the Senate, but we'd like to know the answers. Thank you so much on behalf of the Franco-Nigerian Chamber of Commerce and Industry. It's my pleasure and honor to present this plaque to you, Mr. Peter Mofia.
Thank you very much.
So thank you, Mrs. Ize, for the presentation. And we'll just get our unofficial closing remarks. Adeze, which is the manager over at Mazars Nigeria, will be giving our closing remarks. Adeze, please.
All right. Good afternoon, everyone. I didn't know I was going to take the microphone today, but yes, so all protocols observed. I would like to say thank you to everyone on behalf of Mazars Nigeria for gracing us with your presence. I can't imagine how busy you all are, but you made out time to be here today, so thank you so much. I'd like to thank the French Chamber of Commerce for doing this, and I'd also like to thank my managing partner for approving the expense that I had to, almost arm wrestle him for this event, so thank you so much. Thank you. I hope you had a good time. We will be having other events, and we hope that you would grace us once again with your presence. But most importantly, we hope that we are able to do business with you sometime in the near future. Thank you so much.
Thank you, Adeze. So, of course, the conversation continues. Idea sharing over dessert. Thank you very much.